Okay, quick update here. It's a few minutes before 8 o'clock a.m. New York time, March 1st. We're looking at the dollar index. This is just the dollar index by itself. So a couple of days ago, we were talking about waiting for that candle to close above that price swing high, printing a continuation signal candle. And we got one yesterday, so we're seeing some more follow through. But I'm expecting right now at this moment that it might stall at just about the area that it's at right now. It's reading 90.80 approximately, or 82 right now, but the 80 area. It's on this platform. Let's see how high it's gone. It hit a high of 86. So I mean, it might poke up a little bit higher than that and sort of approach the 91 level and then pull back down. But I don't know that today's going to be a really, really strong day like it was 2 days back. I think today's going to ultimately or could possibly close positive today, but I'm expecting that tomorrow might be a day where it might retrace a little bit. We'll have to wait and see. I mean, I'm just sort of, thinking forward down the road a little bit here, but we do have that W bottom pattern here. And when I talked about, the possibility of seeing a continuation breakout trade, I wasn't too sure it was going to happen, that same day. It looked like it, but I just wanted to prepare everybody that this is what I'm anticipating, and it's probably going to set up a new trending move a lot higher, maybe up towards the 92.50 area on the dollar index, 92.50. But again, anticipate and prepare for the retracements. There's going to be days where we're going to see pullbacks, and it could be, that whole situation could last a week or two. It's not going to immediately run up to the 92.50 area. It could, but it most likely won't. It's going to take some time. Right now, looking at the 4-hour chart, it's all pretty much more of the same thing that I see on the daily time frame. There's my center point high on the 4-hour chart. Candles yesterday closing above. Again, this is a 4-hour chart, so everything's working as it should. Now, the 1-hour time frame is where I want to get a lot closer into trying to identify what's going on right here. At this moment, I don't have any reason to suspect that it's not going to go any higher. But it looks like it's, with economic data this morning, and it looks like it's reaching that 9100, I'm sorry, that 91.00 psychological level. It, that in itself could cause, a day where it would pull off or pull back and then move sideways if there isn't anything too significant to push it a lot further, which is what it looks like right now. But I won't know until I have data. This is a 30-minute chart. Sorry about that. I should have had the candlestick set up here. I don't have the all the indicators here set up for this one. I was looking at something a little bit different on this one, but anyway, we'll take a look at it afterwards. I mean, we're going to be trading through, and I'll have the chat room open until 9:30 New York time. I'm sorry, yeah, 10 o'clock New York time. So, I'll do another update and see if anything changes here after some data. But at this point, that's what it looks like. And it looks the same thing. It looks like it's setting up the same thing on the currencies. I mean, you can kind of hear some of my frustration with it. I think it's too early to really determine what's going to happen here until we get a little more activity and the stock market opens up. So, and that happens sometimes on certain days. I can see what's going on. You really don't really see anything that's going to create a major reversal just yet, but sometimes it's just a little bit too early to really detect that. If we look at the pound dollar, this is the pound dollar 1-hour time frame. Let's go ahead and open this up a little bit. So this candle about 3 hours ago that printed that new low, it wasn't a very sharp or significant move to the downside, and it didn't really close with a strong bearish candle. You see some of the divergence in these two indicators here, and the candles are still holding above or within that lower band of the Bollinger Bands. And it doesn't necessarily mean that that's going to be, everything that sets in play the reversal or a reversal, but it's a possibility. It's something that I'm watching, and I'm waiting for, again, more data. I'm waiting for a strong candle. I don't see anything just yet. I think, again, like I said, it's too early. This is the 30-minute chart. So again, everything's just moving sideways right here. There's really nothing for me to trade right now inside of this consolidation range here on the 30-minute chart for the pound dollar as well. So I'm going back to the 1-hour chart now. Now we're going to take a look at the dollar Swiss. Dollar Swiss, it's moving higher right now, just like a blow-off move, just one more pushed high. But I don't think it's going to go that far. It's running into this old resistance level right here. I just switched to a 4-hour chart. Sorry about that. I wanted you to see what it's running into. So that high right there is 0.9469 or 70. That's what it's running into. It's running into an old resistance from, these are marked off in weeks. So this is last week, about 3 weeks ago. So it's been some time. You know, I talk about very often with market memory, the way I interpret that, the way what I look for or what I look at it as being is the data that you can fit on a chart relative to the time frame that you're looking at, and you know, without compressing the chart to the point where you can't identify any of the candle patterns and see what's going on. So for example, if I was to tighten it up like this, it starts to look like a bar chart. Yes, I can see the data here, and sometimes people in the heat of the moment, it's easy to be to you know, get a little lazy about investigating and looking a little bit further, trying to step back and seeing what's really the overall bigger picture and what's happening. And I mean, obviously you could just tighten up your charts here and leave it on a 1-hour time frame, or go to the 4-hour time frame, and then sometimes you can see some of these resistance points. So I'm going to go back to the 1-hour time frame. If I didn't have that lined up there, that resistance at 94.70, and I didn't go to the 4-hour or tighten up the charts, it might be easy to think that maybe this is another continuation breakout trade to the upside. But as I've said before, when you find a continuation breakout trade and it's confirmed, you still have to ask and stop and say to yourself, is this the first one? Or, you know, is this the first continuation breakout trade that you see? Or was there several others setting up previously, and have they already fulfilled their targets? And in this instance, you can see here, we go back to last week and the week before, and you can see that there have been multiple breakouts, and they have reached their targets. So eventually, if you're not paying attention to the bigger picture and you don't step back and go to the 4-hour chart or tighten up the charts to see what's, you know, where the next level of significant resistance or support is, if you look at it like this and you think, okay, well, maybe there's another continuation breakout trade, I'm trading this, and it stalls, it doesn't go to the 55 pip take profit level. And very often in a situation like that, when it's already been trending for some time and there's been several other continuation breakout trades, eventually it's going to reach that resistance and it's not going to work. So again, you've got to switch back when you're looking at these levels, or leave, you know, when you're doing some of your work on the 4-hour chart, you might need to transfer some of the work, like a resistance point like this, identify that, and then go to your 1-hour chart and drop it in there, making sure that you see it so that you're aware of it. So just wanted to bring that to your attention. I used to make that mistake all the time. I would sit there and, you know, sometimes when you're trading, let's say off of a laptop, you're looking at 4 currency pairs just with the 1-hour chart, and it's easy to get caught up in just looking at just that one time frame and not looking at the other. Sorry, so that's enough about that. This is the 1-hour time frame for the dollar yen. And right now, I don't know what to do with it at this point. Again, I still think it's a little bit too early for me to really make a decision with this one. I see what it's doing. I mean, we've got that low from a few weeks ago, the high. This is data that I moved from my 4-hour chart. So if I was to click over here to the 4-hour or the daily time frame, but this is the 4-hour chart for the dollar yen now. I just switched the timing, and you can see that low and that high. There's a clean move here as an A low, B high, 618 retracement. And it's just bouncing around and retesting that 618 level. So I'm going to switch to the 1-hour time frame. So here we are in the 1-hour time frame. It might come back down one more time and maybe even go a little bit lower than this week's low so far. If it doesn't, you know, from the larger picture, from the bigger picture, from the 4-hour chart, I would rather wait for a 4-hour candle to close above last week's high. And then I would think maybe I can trade it a lot higher and I would get a big, stronger move, trending move. But that doesn't mean that I can't trade it on the 1 hour time frame. It's just that right now it looks a bit too choppy to me, and I don't know how much further it's going to go. So again, it's going to take some economic data. It's going to take a solid setup that I see that makes sense with in a trading session that's got a lot more participation and volume behind it, meaning that there's going to be more activity, more traders looking at it and trying to get into a trade here instead of just trying to trade it during a quiet session. I see that last bullish candle, but this is the type of behavior and this is the condition where I would stay away from something like that. I can see that it would print a solid candle, just like the one before that, that red candle. That bearish candle looked like maybe price is going to come back down and test that support level. And then it just turns around and goes right back up. Well, this one, the same way. It looks like a bullish candle and it might go back up a ways, maybe go through the pivot, maybe. Eventually, some of these are going to work, but a lot of them don't work when you're just looking for these little candle patterns inside of a trading range like this. This is just too much consolidation for me. So I may not trade the dollar yen today. I really don't know. I can't say for sure just yet, but right now it just looks too choppy for me to even mess around with. Euro yen just sort of retesting the support. Again, I think it's too early for me to try to get into a trade here. And then the pound yen, I still think that it's going to move a lot lower. I mean, it hit the first target yesterday. We've got another target down here at 146.22. All I can say is, I mean, if you're in the trade, I would not let it roll back up through the 147.00 level. I just wouldn't give up any of the profits from yesterday, but I still think it's probably going to push down a lot lower. I just don't know when. If we go to a 4-hour chart, I'm sorry, a daily chart. Let's go to a daily chart. This is just a mess. Sorry. All these lines right here are what I use to separate each week on my 1 hour time frame. And I'm just toggling through up here with the buttons going from 1 hour to 4 hour to daily time frame. But anyway, you can see what we're looking at. I mean, we've got another strong daily candle here on the pound yen. I think it's going to go a lot lower, but this particular currency pair has the potential to retrace, and then when it retraces, it could retrace 150 pips. So, your timing, your entry has to be right, and then you have to be using the right stop loss, and you have to be willing to hold on to the trade for a really considerable amount of time in a situation like this where it could be maybe a day or two before it actually fulfills and hits some of these extension targets based on what we see on the larger time frames. But yesterday's trade here, that move yesterday when I traded it with the trade copier, it's I was done with it. I didn't, it went a lot lower. I think it went to 47, sorry. It went as low as 47. So that's not bad, but it didn't hit, that target there at 146.22 either. But it's also not canceled just yet either. If I was still in this trade and I held on to it for the appropriate targets, it would still be a good move. I mean, it would still be a valid trade. It's just taking a lot longer than I expected. But for our purposes and the fact that it's already gone on to another day, another 24 hours has passed, if it rolls back up through the 147.00 level and you're still in the trade, I think I would lock in profits here at this point. I wouldn't mess around if it goes back up one more time and starts to reverse and retrace, because it could go all the way back up to the entry. It's not uncommon for it to do that. It'll go all the way back up to the entry and then right around that range and then drop back down again and still hit the 250 pip target. That could take 2 days, and we're day trading, so I would rather lock in that profits. That was like a 60-point move yesterday, so I would hold on to that profit. I wouldn't give it back. This could just be one of those trades where, I say that this technique is accurate 90 to 95% of the time. This could be maybe that 5% where it just doesn't work. I mean, there's still profits in the trade, but it just might not work. And again, the longer time continues, yes, I'm managing the trades and making sure that the structure still remains intact and I still have to hold on to it. But again, the longer time continues, if we're going on to another day, it's Thursday. We've still got the rest of the New York session with a lot of data, a lot of rumors, a lot of comments, a lot of anticipation, adjustments. Sentiment can change, and then we've got Friday. We've got a long ways to go. This could turn around and stop, and the whole direction could change on this one. So lock in profits is what I'm getting at. That's pretty much it right now for the update here. Again, we're going back to the pound dollar. Pound dollar, again, I still think it's just too early for me to make up a decision, make my mind up about any direction on these currencies here just yet. The dollar Swiss up there at that 4-hour resistance. If things turn around, if the pound dollar is going to move up and the dollar is going to pull back down now today, with some news, this would sort of line up and make sense that it's hitting resistance here on the 4-hour chart, and maybe the dollar Swiss would give us an opportunity to short it sometime today. I don't know yet. Again, I'm not calling to sell it. I'm just speculating. I'm just sort of thinking forward and just looking at and waiting for all of this to unfold and then see if it lines up with what I was thinking.